Today we have a very active verticals in banking, in the insurance sector, in the capital markets, the fund industry, and a variety of other niche areas such as aircraft leasing, ship leasing, etc.
When you did wealth management, it's a capital markets domain. When you did embedded insurance, it was an insurance domain. And then neobanking is a banking regulator domain. So being a unified regulator, IFSCA and IFSC is by default architected for fintech and innovations in that, straddling across these different limits. It is very important for us to ensure that ease of doing business for the regulated entities is baked into our technology landscape. And technology will prove to be that differentiator or a strategic enabler to bring in this ease of doing business.
Look, what's happening is that we're seeing very large strides in the regulatory mechanisms, the infrastructure, and the underlying sort of conditions that make GIFT a very attractive investment destination.
And IFSCA has also set up two sandboxes, one an innovation sandbox and a regulatory sandbox.
Now, innovation sandbox is where bleeding edge technologies are tested, where regulator gets the comfort, no live data. Regulatory sandbox is when we get into live data and some live transactions happen. Probably for that there is no regulation today, but under the regulatory ambit, we permit that to see how well it goes. We have interoperable regulatory sandbox, IORS as we call it, and an overseas regulatory sandbox. The IORS, the interoperable regulatory sandbox, is a regulatory sandbox with IFSCA and the other domestic sector regulators, namely RBI, SEBI, IRD, and PFRDA.
So I think in fact a few experiments done by some of the sandbox entrants have actually enabled us to write regulations which are probably new age in nature. So for example, our payment services regulation was made after a few experiments by some of our payment services providers. There are a few sandbox experiments being run by token technology providers.
And GIFT from that perspective now offers an access that you can innovate from a banking, insurance, capital market all in one. And thereby on our FinTech framework, which has been issued, we almost had 70 plus entities, been showing interest to set up there. We already have authorized more than 50 firms in our FinTech sandbox and innovation box that we have. And they have come from 14 to 15 different countries to innovate here within the GIFT City IFFC. And a lot of Indian entrepreneurs which wants to go global, they are also innovating their products into the GIFT ecosystem as we speak.
The other part, as part of this vision which we are thinking about, is a SupTech system, a supervisory technology system, whereby the filings from the entities to the regulator on whatever frequency which is required is done, and we can use that information and data to do better supervision, better enforcement, and better regulations as such.
What that means is, look, financial services always goes where there's money, right? High frequency trading came about because we saw that machines that could trade in microseconds or picoseconds gave you an advantage. So I strongly believe that AI is going to see a similar curve where what you can do with AI models will exponentially increase, the potential for profit will increase, and we'll see widespread adoption.
We have kind of de-risked a TechFin and a FinTech. Now, TechFins are technology companies serving the financial or BFSI clients, TechFin. FinTechs, we all know. Now, FinTechs typically handle customer money. So the risks are higher, whereas technology companies, they don't handle customer funds. So the risks are lower. So what happens is, when we have a same set of regulations for both of these, you're putting a higher regulatory cost on the TechFin. And this is what we're trying to avoid by saying, hey, we are recognizing that as a separate category. And that's where your AI companies, your blockchain companies, your cybersecurity, identity, your climate tech, all of them can come in and create the innovations in the IFSC because it's under the TechFin category. So through our regulatory framework itself, we have very innovatively put it out for the ecosystem to take benefit.